Hello, I'm Stephen Woodcock. I've been a market professional for over 30 years. Going to take a look at what's going on in the market at the moment. Now, the main thing that is really staring me in the face at the moment is, apart from when we hear a comment or maybe we get some data out, the market is quite stagnant across the board. We are seeing, obviously, some of the second-tier currencies, things like the Turkish lira and the China one, at certain periods having quite rapid movements, but across the board, the general sort of major currency crosses we're seeing at the moment are quite stagnant, and we're out of the summer holiday period, and I have to admit, I did think we'd be seeing a lot more movement in the markets now, really. What I am looking at is that we've got Brexit still going on. The picture has become even more ridiculous, I think. The election now for the 12th of December has put another cat amongst the pigeons, but there's a 100-page document that I've not read. I don't think many people have read it, and I do think that until that document is really examined properly, and we're all aware of what is in it, then I would suggest sterling still remains under pressure. I'm of the thought that obviously 130 was a psychological level. We've traded above 130 a couple of times now, but we've only traded up as high as about 130.20. I think sterling is probably primed for another move lower. You know, this 129, 130 area looks to me as though there are sellers above it. There's support at 128 and 126.5, but I've got to admit, the closer we come to the election date, I have to admit, I think we will see sterling come under pressure again. I think we're in a bit of a mess at the moment. Nothing is clear. I don't know where we're going. It really is. It's really hard to make comments on it, really, until we know what the document really means. So until we see the election over, then what I would suggest is sterling remains under pressure. We see it lower. As a general rule, across the European markets at the moment, although we seem to be seeing maybe a slightly stronger euro over the past maybe 2 weeks, I have to admit it's struggling up at these levels. There's a 200-day moving average, I think, comes in around about 111.95, and I would suggest we may see that, but I have to admit I'm still looking at euro trading lower, and I don't think it will take much for us to maybe break down below 111.50, 111.40, and we trade. If we trade, well, I'd suggest we trade through 25. I think you will quickly see it lower, and we'll see a return to norm, and we see the euro go back to the maybe low 108s. The European indices at the moment we're still in the situation where we're obviously looking at the US and seeing what's happening over there. But I have to admit, there's some numbers coming out, and especially in the retail sector at the moment, that really don't look very good to me. And I have to admit, I think the UK indices and equities are looking quite overvalued. So I've got a funny feeling we may see a correction coming in those. But as a general rule, markets are quiet. We're trading on comments, especially comments, rather than data. So I think it's keep your ears to the news wires and trade off of those if you possibly can. Thank you.